if it goes wrong, the market drops a little bit or whatever, you and I are going to be underwater. You're not going to have anywhere to live because I'm going to take that off you.
That's nasty. So Charlie van den Berg is facing the angels in the den now as he seeks funding for 9 new build apartments in Kingston. What you're about to see is Charlie's pitch on the Property Elevator show, which features on Sky Channel 192. Property Elevator is a pitching show where budding property entrepreneurs come on the programme to pitch for funding for their property projects. They present their deal for funding to 5 property angels who are John Howard, Helen Chorley, Paul Mahoney, Nicholas Wallwork and myself, Ranjan Bhattacharya. Now on this very YouTube channel we put out all the pitches as they appear on the show, complete with my kind of reaction to them and background analysis and commentary. If this is the first video you've seen, make sure you catch the others in this series. They're all on this playlist, so have a binge watch. Subscribe and hit the bell icon so you're notified as soon as we upload, and let us know what you think of this deal and whether you would fund it in the comments below. So let's meet Charlie before he faces us angels. And I'll hand you over to Elizabeth Warburton, who has a little chat with him.
Welcome to Property Elevator.
Thanks for having me.
Tell us a little bit about the deal and what you're after today.
I'm after an investment of £750,000 for the purchase of land and then construction of 9 new residential apartments in Kingston, southwest London.
And is there anybody in particular that you're looking at investing today, or would you be happy with any of our angels?
I would be happy with any of them, preferably a team effort. I think it's always beneficial to have more than one investor.
Okay, great. So you'd like a couple if possible?
If possible.
Lovely, all right, well good luck.
This is a site in Kingston upon Thames. That's what it's going to look like, presuming it's done. How nice is that? Wow, that's lovely, isn't it?
Yeah.
I like that design. Charlie, thank you very much for coming in to see us. Please tell us as much as you can about you briefly and also about what you want funded today.
Okay, well the project is called The Firs. It's in Hampton Wick in Richmond upon Thames Borough. Well, what I'm asking for is £750,000 investment for a 50-50 equity split in the project. It's the new build of 9 apartment units. The land itself is clear, it's vacant, stripped, it has planning permission, and it's very much ready to build on.
Another clear opening pitch there, very clear about what he wants, what he's trying to do, how much he wants from the investors, what the uplift in return is, and clearly mentions that it's a new build scheme, but it has planning permission in the bag. Let's see how he gets on.
The GDV, as estimated by Savills, was £5.2 million. I've taken a more conservative view on it based on the local research and local knowledge, and I've put it into my figures at 4.9 million.
It's very important when you're doing any development project to start with the end in sight, and the end in sight is the GDV, or gross development value. That's the ultimate value from selling those 9 apartments. Then you work back your costs and all the rest of it, and then you're left with your profit.
I'm estimating that over 18 months of design and build will split a profit of just over £600,000. In my calculations, I've allowed for the SIL costs. There's stamp duty, an HA fee, Section 106 agreement. I've included.
Now, all these costs are things that you have to bear when you're building new build type of properties. SIL, or Community Infrastructure Levy, is a charge that you have to pay as a sort of contribution, if you like, to the council's coffers for providing local infrastructure. When he talks about Section 106 contribution, that's another fee that you have to pay to the council. It's like a contribution that developers have to pay to contribute to providing social housing in the area. These are just extra taxes, if you like, on a development project, and in some cases, if these are too high, these can make the difference between whether a project is viable or unviable.
For our disposal costs of the units in stamp and legal fees, and it will leave us, as I said, to split 600,000. The location of the flats is, I can't stress enough, it's second to none. We're on the border of Bushy Park, which, for those who don't know, is the second largest park in London. We're a 30-second walk from the River Thames. There are local rowing clubs, yachting. It's 500 metres from a local train station, which is Hampton Wick. I grew up in the area. It's local to me. I went to school about 5 to 10 minutes walk away from the site. I used to cycle past it every day on my way to college. My best friend's dad had a construction company, and we used to do small residential conversions, extensions. I then went to college. I did a BTEC in construction. I got a degree in construction. I worked in the States for a year in Arizona. I was building a $5 billion semiconductor plant for Intel. I came back to the UK and I've been working for some of the largest developers and most prestigious developers in the country.
Great positioning there and a great potted history of Charlie's CV. And that's very, very important because he basically preempted a question on that sort of subject area. If you're going to build 9 new build apartments, yep, we've got that it's Kingston, it's a great area and all that stuff. We got that you got planning permission. But these projects often fail because of inexperienced project management and execution of the construction phase. That is where you can turn a project which looks great in terms of GDV and profitability. It can easily turn into failure from poor project management. So excellent interjection and very well summarised of the key points of his CV, which demonstrates his ability to execute a project like this. Let's see how he gets on.
I recently finished a 49-unit development in St John's Wood. About 3-4 years ago, I finished a development just down the road from this one, on the other side of the river. It was 350 units for the Berkeley Group. I own a property in Twickenham as well, which I'm happy to give a second charge on for yourselves as a bit of security. I welcome.
Oh, he's ticking another box. Skin in the game. He's willing to give a charge on property that he owns. He's ticking a lot of boxes here.
Any questions on the project, myself, anything else you care to ask?
Thank you, Charlie. Your backstory is excellent, and clearly you know exactly what you're talking about, which is refreshing. So thank you very much for coming today. To have someone of your quality and your experience and your qualifications is great. It's great for the show and it's great for us as investors as well.
Have you got an offer on the debt finance at the moment from a bank?
Not from a bank, from a broker. He's agreed that we'd need 750k equity and they would put in the rest.
And is that 3 million, is that including the purchase price? It's a land and then development loans?
Yes.
2 phase? Yeah, okay. Are there any PGs on that? Personal guarantees?
They haven't said anything about it.
I think there will be.
There will be.
Worth double checking.
I expect there will be, but that's not necessarily a problem. So don't worry.
Standard.
Have you got an application in principle on you as a...
No.
Okay,
No.
that would definitely be something to do, depending on how much you've done in your own name before.
Mm-hmm.
You know, you've done a lot for other people, but getting this level of finance as, you know, first, second, third deal would be
But Nicholas, that's why he's
challenging.
here.
I understand that.
Okay.
So you would want us, just clarify if that's why he's here, you want the money, but do you want us as a shareholder in an SPV so that we go on the finance with you?
50-50, you said.
Yeah, okay. And just...
Very, very important point to clarify. So he's got some indicative financing there, but it does need a considerable amount of equity. So he's got the experience in terms of doing this for other people. That's fine. So he is in need not just of equity financing, but also the experience of one of the other angels here.
Just on the second charge you've offered,
Yep.
what's the value of that property and what equity is in it?
So my current equity is £50,000 in the property. After the renovations are finished, which should be in 3 to 4 months, that will rise to between 200 and 220,000.
Okay, all right, thank you.
How many units is it?
It's 9 units, so it's 6 one-beds and 3 two-beds. And they're quite sizable units. The penthouse itself is a 2-bed, but it's 100 metres squared.
What's about the average values for the one beds and the two beds?
It must have been about £760 a square foot. Each one is circa 750 square foot. It must be between 5 and 700,000.
Yeah, they're big one-bedders, aren't they? You used a planning consultant on this, or?
No, it wasn't me that got planning.
It's already got planning before you've got involved. Okay, and have you agreed the deal in principle?
Now, I think what we're alluding to here is that these flats sound very, very generous in size And this is one thing that often happens, because when you actually look at a plot of a building plot which has already secured planning permission, then you sometimes find that it isn't as space optimized as you would have liked. I see this all the time. You see schemes up for sale where they've got planning for 10 flats. You could easily go in and resubmit and get 13 or 14 on the plot quite easily. So let's see how this actually unfolds.
No, not with the owners of the land. Because
no, but it's available and we can jump in on, we can jump all over it Monday if we want.
Yes.
Great, okay.
And it's on for the 1.85, is it? Or that's
Yes.
what you think you get it for?
It's on for 1.85. I spoke to the agent. They had a couple of lowball offers.
And those were refused, I guess?
Yes.
What were the offers, do you know?
They didn't divulge.
Oh, okay.
They just said they were too low.
One way or the other, you can normally find out, because that's really important. Knowledge is power, and to know what someone else has bid and it's been refused, gives you an indication. It might be, you might have been able to come in here and said, look, I think I can get it for 1.75 because I think they turned down 1.725 or whatever it might be.
It seems that the sizes that you've described for each unit are over the London plan minimum. And I wonder, because most developers would seek to get just do the London plan for the 1 bed, the London plan for the 2 beds. Because the current owners have not managed to get the density they require for the site, I wonder whether that's the reason why they're selling it on. And I wonder whether that is actually one of the reasons why the profitability is not as high as I'd expect from a site in this location. So what am I banging on about there? Well, basically, here's what's going on. Someone has got planning permission for a site and they're looking to sell that site on. Now, the question I'm always asking is, why aren't you building out this project yourself? Now, there are 2 explanations for that. One explanation is that it's just not their game. What they do is acquire the site, they get the planning permission, they get that planning uplift, if you like, and then sell it on for someone else to do. That's fine if that's the reason why they're selling it. The other reason is sometimes that they've got the planning permission, they've gone through the costings and realised, you know what, it's not that profitable, it's not worth my while building this thing out. So what you've got to do is, when you are buying a site which has planning permission, is to figure out which one of those 2 it actually is. Is it that it's just not their business to build out, or have they done their costings and worked out it ain't worth it? Now, if it ain't worth it, that doesn't mean the deal is necessarily a dead duck. In certain circumstances, with a better planning consultant, you can go back in for planning with a revised scheme to make it more profitable and to make the figures stack up that much better. When you're developing multiple units, it's as simple as this. The more units you create, the more profitable the deal will be. What I was banging on about there, about the London plan, that stipulates some minimum sizes that apartments need to be if you're developing out in London. Now, those minimum standards are very, very generous indeed. And when a scheme like this has apartments which are so much in excess of the London plan, there is plenty of scope for further optimization of this site.
Maybe the person that's put this planning application in just asked the architect to whack a planning application in, to get planning in order to sell it, and hasn't put a lot of effort into it. But that's what you need to know, because then you know there's a better angle. You know there's an angle then where you can improve the planning. You could have then come into us today and said, look, at the moment it's this, but I'm going to turn it into this, and if I do this, it's going to be worth that much more money. And I've spoken to the planners, and the planners in principle are happy with it. That's what we needed to hear.
There could be a huge opportunity here by the landowner just saying to the architect,
well,
whack in a reasonable plan.
That's what we need to know.
And the architect hasn't got any decent brief from a trained developer.
They've just used their ego and used their usual.
Nice.
One, I love the idea as a park nearby, because people realise there needs to be an open space. They'll have a lockdown and COVID in the future, who knows? People are, any site development near a big park, I think is a real bonus, and I think going forward it will continue to be a bonus. For me at the moment, there's just not enough profit in it. If it goes wrong, the market drops a little bit or whatever, you and I are going to be underwater. You're not going to have anywhere to live, because I'm going to take that off you.
That's nasty.
Yeah, because we're going to be underwater And if I don't take it off you, the bank will. I would have been very interested in this deal, very interested, if you'd come in and said, there's an uplift here, uplift there, I've spoken to them, and by the way, it's $1 million profit, not 600.
I think John's spot on with his analysis there. John's talking about parks nearby, the sizes of those apartments. I mean, you can have a park inside some of those apartments, for God's sake.
Then, if something goes wrong, I like to think I can still make 500 grand out of it.
To put the figures that I'm looking at on that, the 600 grand profit on your GDV of 4.9 is 12% return on GDV, 14% return on cost. It's very tight. I don't think it's beyond the realms of expectation that we see a 10% or more dip in prices, particularly on a time frame of 18 months. And it's 18 months, you think that's to build, or you imagine that they would be sold in that time as well?
To sell as well.
Oh, to sell as well, okay.
I would always leave a year to sell them.
Helen's nailed it really with the figures here. You got 10-12% profit margin, and 10 to 12% profit margin, and these flats are not going to be ready for at least 18 months. And what's going to happen with property prices in that period? If they fall 4-5% as they expected to do over the coming year, then you're not left with much at all.
Year to build, year to sell is how I would look at that. And I think, Helen, you mentioned it earlier with someone else, that the same thing.
Yeah, exactly. Yeah. I've got stuff that I was told was going to be done in kind of 12, 18 months, 4 years on. Yeah, still. Anyway, let's not go there.
So I think you need to consider the exit on these as well, especially with the current planning. I've got quite a lot of experience in the sale of properties off plan, and these wouldn't sell off plan because they're not really investment stock. They're owner-occupier stock.
Do you know what, Paul? Some people do like to own and live in a property.
No,
they don't always want to bloody buy
the
buy-to-let obsession with buy-to-let.
I think these are owner-occupier stock.
Totally, yes.
The yields on them won't be great.
No tenants in there, great.
And owner-occupiers don't really buy off-plan.
I get what they're saying, but I'm not sure how relevant that is. I mean, people don't buy buy-to-let properties in Kingston. Maybe Kingston upon Hull, but certainly not Kingston upon Thames. The yields are just too low. This is owner-occupier land through and through, and owner-occupier stock in that area is worth decent money. The issue here is much more about the developer profit, because these units are just too big and the profit margin ain't enough.
I would agree that you want to account for 6 to 12 months to sell them once they're done, and that drags this deal out quite a bit and just eats too much into that 12% margin.
The one other thing you have to remember, when you're building or converting a flat or a block of flats, you have to get it all finished before you can sell one. Even if you get people who exchange contracts with you prior, no one is going to give you the full amount of money until they have a completion certificate in their hand. You cannot get a part completion certificate for a block of 9 flats. You have to get it.
Very sensible comment, actually, from John. And in the current climate that we're in now, it's far more favourable to build, say, 9 houses as opposed to a block of 9 flats, because, as John rightly says, you can phase a scheme of 9 houses. Finish 3, sell those, then do the next 3, and so on. With a block of 9 flats, that's impossible, and that adds more risk, particularly in the current climate.
You have to get it totally finished, which means all your money's out before you get any in. So it's not like a housing estate where you can build 10 and you've got another 20 left to go and you can phase it. You can't phase it. So unfortunately, on this occasion, I won't invest. However, I want you to keep in touch with me because you're bright, you're intelligent, you know what you're doing. All you need to do is come up with a slightly better deal, and I will definitely like to think I would invest in you.
Okay. Excellent.
So I'm out.
I'd back up what John said, that it's very clear, like you clearly completely on top of the numbers here, and I like you've rounded down from what the estate agent said, so that conservative, that realism that you've brought to it is very reassuring. I agree with what Ranjan said, that actually the value in this would have been the planning, and that's the juicier part of the deal. But at those return on GDVs in this market, it's just too tight for me, so it's not for me this time. Thank you.
I love the look of the site, I love the location. I think you're highly investable. I think you're going to go on and do great things in property off your own back rather than working for someone else. you've got that background, that education, that knowledge to then go and turn that into practical use. So that's exciting for you. I'm not a home builder, I'm an investment builder. I like to build investment buildings that create huge yield. I don't want to build someone's high luxury home anywhere. So it's unfortunately not the deal for me.
Has anyone noticed that the no's are a lot longer than the yeses?
But I think you'll do very well. And good luck with this one if you get it done, or your future.
I'm not really going to sort of add anything. I think you're a great entrepreneur. This is just the wrong deal for me.
And there you are. That's a nice and short and sharp no.
Just to echo what the guys said, I think we would all feel comfortable JVing with someone like you, and you're the type of person we would want to be overseeing a project like this. But just this particular project, the way it's set up, the margin just isn't good enough.
Charlie, thank you very much for coming today, and I wish you all the very best, because I'm sure you'll be very successful. And please keep in touch, because I think we may well be doing something together in the future if we can.
Thanks a lot.
So here's the thing, guys, with this particular deal. Now, what am I? I'm an investor. I'm not a builder. And when you have a project presented to you where the planning permission has already been got, then that planning uplift, that bit that I normally do, someone else has done and is trying to profit from that. Now, the angle here is simply to take those existing plans and build out. The skill set required to do that successfully is construction project management. Now, generally, that's not my skill set, which is one of the reasons why I didn't go for this. My skill set is in actually getting that permission. Now, that said, there is an opportunity, a potential opportunity with this deal. But I think what Charlie should have done is brought that to the table after he's explored it a little bit further. And that's to find out exactly the story, because I'm always on about the story of how the deal got to where it is before the time that you buy it. So the story of how that planning permission was got. So what was the brief given to the architect or planning consultant? What were they actually asked to do in terms of this build scheme? What constraints were presented by the planning authorities? I mean, for all we know, the planning authorities may have insisted that they'll only give permission on that site if they built these oversized apartments. If that's the case, there's no point going back to them and trying to reapply, because they won't get it. You may be lucky. It may have been that the architect just took complete freedom to do whatever grand designs that they wanted without being given a proper brief by the existing site owner. Now, without that piece of information, it's very, very difficult, not difficult, it's impossible for us angels to tell whether there is an opportunity in this particular deal. So as it stands, the problem here is that it's just developer, it's just building out profit. The margins on that are too low, and with the headwinds on the way over the coming year, the 10-12% margin can quickly be vaporized into nothing. But I fully agree with my fellow angels that Charlie himself is a good egg and a very investable entrepreneur. It's just the wrong deal that he presented to the den. But would you have backed this deal? Let us know in the comments below. Tell us what you think. And make sure you smash that like button. Take time to do that. It helps us out on YouTube. Let's see what Charlie says when he has his chat to Elizabeth.
Yeah. Thank you. Thank
you. So Charlie, tell me how it went.
It didn't go well because I didn't get the investment, but other than that, it went well. They liked the opportunity, but it just didn't have the margin in it.
Right, okay, so just a little bit too small a profit.
Yes. Yeah.
Right, okay, so what's your next steps then with the deal?
The next step is to go back to the vendor and see if I can get a better price on the land.
Okay.
And hopefully make it stack up a little bit better for them.
Okay, and what, then you'll be back in touch?
Hopefully.
With them? They've said to keep in touch?
They said keep in touch, and I plan to do so.